Right. We have what we call a Fibonacci, and I know most of us have heard about it. A Fibonacci. Right. What is a Fibonacci? A Fibonacci is a retracement tool which measures retracements in a trend. So whether we are in an uptrend or whether we are in a downtrend, this is the tool that we're gonna use to measure retracements, and we find it in each and every of our MT5s. Even on our trading view, it's there, right? Even on terminals that facilitate trading, you can find the Fibonacci under tools, right? So it is a tool that we measure for, let me type it, a tool that we measure, that we use to measure retracements, right? It's a tool that we use to measure retracements. And the good thing about us using a Fibonacci is it's gonna give us sniper entries, and it's one of those tools that can help us to know whether our trade is now buying or whether our trade is invalidated, a buy or a sell as well. So I'll talk about this. I know it's not boring, but everything revolves around market structure, right? So as we know, when we're in an uptrend with a high, a low, a high, a low, a high, a low. Actually, let me use this. Sorry about that. Let me use our trading view. We'll be sharing the screen now for trading view. Okay, where are you? Right, here's our trading view. So what what we do with the fib is, let me delete all this stuff. Let me delete all this stuff that we did in the morning. Right. Let me delete it. Let me delete it. Sorry about that, guys. Right. So when we are in an uptrend, what do we know that the market does? It gives us highs and lows, lows, highs, lows, highs, lows, highs. So I want to be at this point here, right? So now what we want to use the Fibonacci for is we want to catch our trades when it's still at this point over here, right? We want to catch it at these points where the retracement ends, right? This is where we want to catch our trades, where our retracements end, where our retracements end. So in this case, we know that our first retracement, which is where, which is here, our first retracement was here. We know that our second was here. We know that our third was here. What about our fourth? Where is our fourth retracement going to be? We don't know, right? This is where the Fibonacci comes in play. So if we want to look at our fib, let me show you how it looks like. Our Fibonacci looks like this, right? I have done a little bit of customization on my Fibonacci, but what's important is what you're going to learn, and I'll show you with the live examples from there, right? So what we know is our Fibonacci has what we call a 0% level. A 0% level, you can write this down. You can write this down, or you can just see me writing it. It also has what we call a 0.23% level, right? It also has what we call a 0.38% level, right? It also has what we call 0.50% or 0.5% level, right? It also has what we call a 0.618% level, right? But basically, I can just call it a 0.61% level because if you check on the 0.2, is on the 0.23 supposed to be 0.263, but well, the other figures at the end, they don't really matter. And then we have what we call the 100% level, right? But if you see on my Fibonacci, I've added this one, the 0.78. I'll tell you why I added it, but don't worry much about it. It's my own customization, right? So what's important to know now is most retracements that happen in the market, they happen on these levels, on the 0.5%, on the 0.61%, and 0.61% and on the 0.71%. I haven't added it, the 0.71%. I'll also tell you why I haven't added it on this chart, right? So this is where most retracements happen. And it's quite funny that I've seen many people use the Fibonacci in a very, very, very weird and different way. So now, how do you use it? When you're using a fib, if you are in an uptrend, I want you to listen to this carefully. When you're using a fib, when you are in an uptrend, you touch the previous low and the new high going upwards when you are in an uptrend. You don't go the opposite, like some people, they just come and they drag it down like this, and then they say this is our fib. No, it doesn't work like that. What you do is you touch your previous low and your new high, and then you place it right. Since we know where price is supposed to react, what we want now to see, um, let me just tell you about this. I was talking with my private mentorship class, and I was like, you know what, I'm gonna teach these guys the fib and order blocks. And they were like, no, don't teach them. But because of the love I have for you guys, I was like, no, guys, come on, let's just do this. So this is something that you really need to listen to, okay? So what we expect to see now is we expect to see lower time frame market structure approaching our levels. And when it approaches our zero point 0.5 or our 0.618%, the only confirmation that we need is break of market structure and a continuation with the alignment of the trend. If you master this only, you've mastered on how to enter with the fib. Right. So let's say all along this was our H4, right? Let's say this was our H4. We'll go on the actual chart and I'll show you. When we discover that we are now retracing in that H4, what we need to take note of is market structure in our smaller time frames. It should approach either our 0.5%, our 0.61%, or our 0.71%. When it approaches, the only form of confirmation that we need is break of market structure. Some people will take it to the extremes and start from change of character, but since you're just starting to learn this, we can just start with learning with break of market structure. When it breaks your market structure now, where most people are seeing sales, you'll be seeing buys. I think you even saw that happened on the gain X800 that I gave, gain X600 that I gave. Many people were seeing sales, but why did I choose to buy it? It's because of this concept, right? Now you align to your bigger time frames and then you move and go. What does it mean? It means you now have a new low here, right? So let's label this our low. Why are we calling this our low? Because it was broken this previous high over here, right? So as we have our new low, what are we now expecting again? We're now expecting to have a new high. And when we get that new high, let's say our new high comes from this point, what do? We take our fib. So let's remove this fib here so that it don't confuse you. We take our fib and we touch the new low and the new high. What are we now expecting? We are now expecting for price. We are now expecting for price to give us that market structure and for in our main areas, give us a break and then continue going up. There's no space. It's kind of squeezed over here. But I hope you're understanding what I mean. Right. So let's remove all this noise and continue. Sorry, I opened the wrong chat. So let's remove all that noise and let's continue. Okay, so we've removed it. So the same thing happens when we are in a downtrend. What we are willing to see is our market structure going down. And there's a point whereby we are going to reach this stage. Now, we don't know where our retracement is going to end. Since we are selling, we take our fib from the bottom going down, right? Meaning that our levels are now above. So in this instance, what we're willing to see is we want to see now that market structure coming to our levels and giving us a break of market structure before it shoots down, right? And like I said, this usually happens around the 0.5, 0.61, and the 0.71, right? I hope you are understanding. This is where we start learning entries and we start taking entries on our own. So for me, this is a very important topic. I spent days on this topic so much that I when I finished doing it, it was something else. I was all over the place, very happy, like I've mastered something very, very new. And yes, I had. Right. So let's take for instance, we are um here and we want to measure this high and this low. We want to measure this high and this low. Let me mark the high and the low, and then we'll move with them as we go up. So we can start here, is it? Right. We can mark this as our high, and we can mark this as our we can mark this low first, and we mark the high to that low. And then when we take a fib, what did price do? Sorry, I don't know what's happening with come on mouse. Why? All right. You can see that when price came, um, it came around my 0.71. We can't see it here because on this one it's not there. But let me just go to M15 so that you clearly see in the smaller time frame what really happened when we came to that area. Right. So, like I said, what do we need to see when price comes around those areas? We need to see a change of market structure. Some people can start from change of character, but what happened here, we can see that when it came, we had a change of structure in this area, which was our breakout structure. Yeah. Already in M1, we had a full break of market structure. But then, now remember from the concept that I taught you, our first break is what you call our change of character. And if you really look inside, we have our first break, which is our change of character, and our break of structure in that M15 at this area over here. Why did it choose to react at this point? Because this is where our 0.71 lies. And why did it choose to come and target that point so that it changes direction? It aligns with our fib, right? So what did price do from this point? It shot straight up, never came back, right? So let's look at another point. Um, if I may take this area over here, this was our high, low to that high, high, low. We can look at this area which we had our low. Okay, let me use this, right? So let's move on to a larger time frame so that we can clearly see it. Let's go to H4. Where is our fib now? Our fib is there. Right, I want you to see this. So when we touched the low and the newly made high over here, what did price choose to do? It came, if you can see over here, it came just tipped on the 0.61% and then it went up. So what was really happening at the 0.6% that made it go up? Let's go back to M15 again. This is tiresome, but this is part of the lesson and part of our analysis that we do, right? Because Forex is one thing that you cannot lie about or that you can say, I'm just gambling on it. If you follow the right rules, it will actually reward you and you see everything making sense, right? So what you see is when it came to the 0.61%, it came up, gave us a break of market structure where it gave us a break of market structure in smaller time frames at this area over here. I'm assuming we can already see it. I'm assuming we can already see it where the break of market structure at this area. And then what did price do? Even if it played around a bit, it shot up. Right. So let's look at other areas that we can put our fib on and try to relate to them as much. So we have this low over here and we have this high over here that we can all clearly see. If we touch the low and we touch the high, where did the market retrace? This is not magic. This is actually something that's happening on the charts every day. Where did the retracement end? Where did the market start shooting up? Yeah, right. And what's the level around there? 0.61%, 0.71%. And what do we see at that level? Break off market structure, and then it shoots up. In those smaller time frames, break structure, and then it shoots up. I'm hoping we are all understanding. Is there anyone with a question before I move forward? Anyone with a question or anyone who might think that they have a question before I move forward, you can just raise your hand and then I'll answer you. So let's do another pair. Let's do another pair. Okay, Samuel Ryan raised his hand. I've unmuted you. You can ask your question.
Can you hear me?
Yeah, I can hear you clearly.
Okay. Thank you. I've noticed where you're marking your lows. Um, how do I properly define that this is a lower low? Because on the last example you just gave, there's another low that's lower than the one you marked your Fibonacci from. Why wasn't that low valid?
Okay, let me go back to the charts and see what you're talking about. Right. Which one are you saying is a low?
Do you see where your Fibonacci is starting at the bottom?
Yeah.
Okay,
This
can
year.
you move it to like the exact point where there's 100%?
Yeah.
To your left again. Yeah, there. But yeah, this low. You didn't mark this low. Why was that?
All right. So I want to tell you something. I might not have extended it here. Right. Is it?
Yes, yes,
But my
yes,
way of marking lows, I want you to notice something. I can just go back again. I can do an unchange. Undo. I've undone everything, right?
yes,
If I'm to put a straight line here, what you're going to see is I've actually separated the bodies and the tails. Sorry. I've separated the bodies and the tails in a direct way like this. Can you actually tell? Can you actually see?
yes.
Yes. So for me, that's how I mark my laws. Of course, yeah, that's a good concern that why didn't I mark it straight here? But this law is actually the one that I was referencing with. Like when I'm marking my laws, generally I don't mark the tails. I separate the bodies from the tails like this. Let me just do it properly so that it doesn't confuse you like this, exactly like this. So my actual law here, the one that I'm considering my actual law is the one that you're saying why I didn't mark it in that manner. But I was considering it.
Okay,
So generally, just to add on to that, whenever I see a law like this, I never mark the tail. What I usually reference that law with is the body and the wick. I separate the bodies and the wicks. The wicks, they stay below, the bodies, they go above. Why? Because wicks are just evidence that, price moved here, but didn't end up getting as strong as it's supposed to be. So I'm more concerned about this price. So in as much as you see that I might have been a little bit over here, doesn't mean I was considering this area as my low. I actually was considering this one.
okay. Does the same apply to um the the boom and crash and the pain and the gain ticks, the spikes and ticks?
Yeah, it does. Each and every concept that I'm teaching you, it applies in both markets. So what I can also do is I can show you on boom and crash, I can show you on volatilities, I can show you also on world trade ticks and world trade synthetics. The concept is just the same.
Okay.
So
Okay. I would like to see one on the ticks and the spikes. And sorry, just one more question. Uh, what about uh when like you said when we have retracements, right?
yes.
Uh, what is more of confluence, an order block or a fair value gap?
All right. So remember in today's session, I'm like, I'll add a Fibonacci, and then after this, you're supposed to do an order block. So usually the confluences that we use is either one of them, either an order block or either a fair value gap. But then now, if we just rush to learn an order block without doing the fib first, the fib is the one that's supposed to be telling us, you know what, you should choose this order block. So I'll get into that, don't worry.
Okay, thank you.
Okay. So right, as per our request, what I'll do is I'll go to derive now. I'll go to derive and then we'll see this. Once we see it, and then we'll move to other blocks. I'm just scared that we won't actually be able to manage time, but definitely we will. Right. Can we all see my derive? Can you see it, Mr. Samuel?
Your
You can't see my derive, so that means I have to share this other screen over here.
okay, yeah, it's still on trading view.
Right. I think we can all see it now, is it?
Yes.
Okay. So let me just open some layouts that I did. Mm. And let's choose any boom or crash. Right. So in this example, what I'm gonna choose is this crash 900. Now, I want you to look at this. We were in this uptrend, and as we were in this uptrend that you see here, if we take our fib from this low to this high, our retracement actually happened on the 50% there, right? Although it never really dipped in deep, as long as it was 50% or more than 50% way there, we can actually say that's where it reacted. And let's move on to a smaller time frame. We want to see what happened as we approached that level, right? What we can see is, remember what I taught you? What we want to see is market structure going down, high, low, high, change of character, high, low, a break of market structure, and then it continues, right? So now this is a break. If we want to check again, we have a new high and a low. Just because we broke this area here, this high over here, this means that this is now a valid low, a valid high, sorry. And as it starts to retrace, what do? We take our fib, right? We take our Fibonacci. Since we are going up, we touch from the bottom going up. And then what do you see? You see that when price started giving us market structure in that small area, it came, gave us a change of character, break of structure, came, tested this what do you call this? Tested this demand zone, and then it shot straight up. Again, let's do it again together so that you can see it. With highs, lows, highs, lows, highs, lows. I want you to see this flow never came and took this flow out. So what we now have is a break of market structure and price shows straight up. When it broke this area, it now means this is our valid low over here, right? So what do we do when we get a valid low? We take our fib, is it?
No. Yes.
When we take our fib again, let's see if it's gonna work here. Hey, let me delete this fib here, and let me delete this one here. Let me delete this one, and let me put a new one. So this is now our new low, and this is now our new high over here, right? This is something that is actually happening like now, right? So what you see, you see that price is now giving us market structure in those small areas. It has left a gap, and this gap is the whole reason why I'm going to make price give me a break of structure and then come. Why? Because we have unfilled orders over here, and then still we have to continue going up.
Yes.
So at this moment, like in real time, what is happening now is we're just waiting. You see, this is our presumed high in this time frame. We're just waiting for price to just start giving us a change, a break in market structure. Then we know now we can start buying this crash 900 and then we go up. Actually, for this
Okay.
crash 900, if I show you something, you can let me show you this layout. Let me show you this layout. Um, I want to show you this layout. I did this pair like a week ago. I actually exited that trade yesterday. I had like 6 days of holding it. So I want you to see this. Where is that crash 900? Sorry about that. I don't know now why it's not loading. Is it this black and white? I'm assuming it's the black and white. Right. Everyone was saying crash 900 is selling and it's gonna sell, it's gonna sell, it's gonna sell. And to myself, I was like, you know what? I'm gonna buy this pair. And I ended it here. Right. So my reason for entry was actually simple. If you look on the analysis that I did, I just took my fib from my H2. My H2 is not loading. I don't know why sometimes TradingView does like that. You can see now there's a fib that was already there. So what I did was I was just waiting for smaller time frames to go like high, low, high, low, high, low. As soon as I got that break, I knew that game was over. Right. So my entry, it was around this area over here, and it came, never broke that area, and then it shows straight up. If you take even up to now, it still has to buy. Meaning what? Meaning that if we take our fib, right? Sorry, if we take our fib in this area that we are at right now, and
Yes.
we place it from this low to this high over here. I want to show you something. To this high over here, you can see now that the reaction is started on the 0.618%. Is it?
Yes. Yes.
Yes, exactly. So what if we move on to M15? What are we going to see? If we move
We'll
to
see
M15, we're
the
going to see our market structure, right? It's trending going where? Down. High, low, high, low, high, low. So now what we just want is a change of character in the Brego structure, and then we continue.
so right now you're still anticipating it to go lower to the 0.7.
It has to play around this area that it's at. But what we are now more interested in is it going to give us market structure? As long as it doesn't go below our 100, it's fine. Because if it goes below our 100, we are now considering that it has violated this law over here.
Okay.
Yeah. So the moment it violates that law, we now know that we have broken structure going down. So we exit that trade. Right.
So if like where it is right now, if you happen to have a change of character, would it be safe to enter, or should just let it play until I see it go lower and making another change of character?
Okay. So according to today's lesson that we did in the morning, we did about the morning star and the evening star pattern. Actually, the change of character is our early entry or our risky entry if we are to apply using the morning star or the evening star pattern. And you might be surprised if we check from this point. Let me see. Let me go to H1. I want to show you something. I hope it shows up. H. So that means I have to go to H2, of which my H2 is not loading. What about in H4? Let me go to H4. Most probably we would have gotten this in our H2. That's where it would have shown. Or maybe do we have 45 here? No, no, we don't have. But actually, well, that's a story for another day. But what I would do is when I get a change of character, as for me, I'll straight away enter that trade.
Okay. On the M15, isn't that a change of character that happened on the 0.61?
Okay, let's go to the M15. There's no change of character yet.